Hi, welcome to another stock review and analysis video brought to you by L.E.A.R.N Invest. Today we're actually going to be looking at HONBUN Limited. So we're going to go through the review of the company. We're going to look at the history of the company, price history, what are the financials, and just to get a bit of understanding as to what the future of the company may look like. So this episode is actually sponsored by JMB Moneyline, and I'll speak a little bit about them later. So let us get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome again, everyone. Let me know where you're joining us from. So we're going to go through the review, and I'll take any questions that you have at the end. There may be some announcements that I may get to at the end of the video, but we're going to go through the review first. I am going to just open with a brief word of prayer here. So thank you, Lord, for this day. Thank you that we're able to meet as investors and learn, grow, and invest together. Bless us now in Jesus' name. And right, evening, Orville. Let me get started here. Yes, so again, I just wanted to bring attention to the fact that this review is sponsored by JMB Moneyline. If you want to access and learn more about Moneyline, the link is in the description of this video. All right. So anything that I discuss here is going to be for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice. We're here to educate as Learn, Grow, Invest. So anything that I say is not to be taken as solicitation or recommendation to buy or sell any securities whatsoever. All right, so we're going to talk a bit about HONBUN, as I said before. So usually our stock review and analysis videos takes the following format. So I'm going to go through the sections that you see here. We're going to spend maybe the most time around the financials, because that's where maybe a meat of the most of the data will be. And we're just going to try to get an understanding as to the health of HONBUN and to understand whether or not this would make a good investment or not. All right, so for HONBUN Limited, as the name pretty much suggests, it's in the name, 1982. It was founded in 1982 by a husband and wife, Michelle and Herbert Chung, and they went to list on the stock exchange in June 3rd, 2011. That was the day that they listed. So they made 18,750,000 ordinary shares available at a price of about $3. There is about 9,345,000, I believe, that was made available to the public, and the rest were reserved. And the reserved prices were ranging from, I believe, $2 upwards. I can share the article as well. But the point is, they've been listed for more than 10 years. And so because of that, we'll actually talk about a little bit later the fact that they are now, no longer able to access that tax break that junior market companies are able to benefit from. So that's something to note in terms of their profitability moving forward. 521 investors participated in the IPO, and the lead broker at the time was Mayberry Investments Limited. In terms of the company, HONBUN, I think, is a name that most of us are familiar with. So the company, as I said, was listed on June 3rd, and they're pretty much a manufacturing and distribution company. So baked goods, donuts, bread, like almost anything that you can think of within that line of baked products, that's what they do. I'm going to be looking at their website shortly for you to see some of the products that they have. Here are a few of their brands on the screen. You have the HONBUN, Shorty, Pitney, crackers, and the rum cake as well. So let me actually just bring up their website so you can see some of those products here. So we're on honbunja.com. So this is a donut. I must tell you that this is one of those that's probably in every single shopping cart for me whenever I go to the supermarket. So these are some of their products that are listed here. Raisin bread, cupcake, rum cake, pineapple cake. You're not able to see it as big. Let me see if I go next, if it will show us a little bit more detail here. But you're also seeing the bread here. So just understand there's quite a number of products. I believe over 40 products they have. So any supermarket that you go to, you're likely to see something from HONBUN. All right, and they have a few outlets here. There's Princess Street, East Street, Halfway Tree, Crossroads. I believe in their annual report they mentioned that there were some new outlets that were opened across the country. We're going to look at that as well. And let me just show you a little bit as to the leadership of the company. Let me just look at that briefly here. Just waiting for it to load. I did notice this issue when I was going through the website. So if it takes too long, we'll just keep it moving. All right, so that's taking a little long. I'm actually going to go back to the presentation. If it comes back up, we'll get there. All right, so I was talking about their different brands. Understand it's quite a number of products. They're a manufacturing company. So it's an easy business model to understand, all right? In terms of their history, in June 2016, they did a 5-to-1 stock split. And what happened at that point, their shares would have increased from 94,253,000 to 471,266,950 shares. All right, so if you were a shareholder at that time, each share that you have would have been multiplied by 5. That's how stock splits work. And that was all the way in 2016. So we have not seen any or heard any notice of any funds being raised or anything like that. If there was, would have covered it here, but nothing that has been said to that tune. But this is something that they would have done in the past. All right, so let's take a look at their financials. I'm going to check quickly to see if the page loaded. Okay, here we go. So this is Herbert Chung, the executive chairman. That's Michelle. That's the CEO. We have Paul Moses, Charles Heholt. Hopefully I'm pronouncing that correctly. And Yannick Page, who is a non-executive director, and Wayne Ray, that's non-executive director. All right, so that's the management team. And you can learn more about them on the website, as I said, honbunja.com. And we go back to the presentation. So we're going to talk about the financial highlights. So I'm just going to share some quick things here, and then we're going to go actually into Excel and look into the financials a little bit deeper. So revenues are up 28% at the end of their last financial year. Their financial year is from October 1st to September 30th. So it's not in line with the calendar year. So we're in their Q4 now. So we are waiting to see what their Q3 report will look like. So in this analysis, we're going to focus mainly on the last 5 years ending in 2021. We will look at the 6 months briefly, but only to highlight certain key things from there. But revenues are up. Gross profit has been trending upwards as well. That's what you're seeing here. Net profit margin was 10% at the end of last year, and that has been trending upwards as well. We see gross margin was 48%, operating margin was 13%, and we have here to the left their operating expenses, and of course you expect these to go up as revenues go up. So that's something that we're going to be keeping an eye on, how they're able to manage their expenses going forward. Again, these are just some of the highlights. We're going to drill into them a little bit more later on. In terms of how they're looking from a cash perspective, let me actually remove my video here. So what we have here to the top left is the cash flow statement for the last 5 years. So this is just the highlights. We see their cash balance that's the dotted line that's trending up. So they do have $404 million in cash as at the end of the last financial year. They have been growing in terms of their return on equity and return on assets. So that's a good thing. Numbers are actually very high, and we're going to talk about those a little later. And they have been, steadily reducing their debt. They took out a $30 million loan in 2017, and they've been taking their time to bring that down. So we'll talk about that a little more later. And this is their cash position here to the bottom left. Again, these are just highlights of the financial statements. We're going to be looking at them in depth right now. So let me bring that up for you to see here. All right, so there we go. All right, so I'm going to zoom in as well, so it's a little bit easier to see. All right, so we're going to start with the income statement. We see here, as I mentioned before, if you look in this column here, you'll see a little line chart that kind of shows the trend of the numbers that we're looking at. So we say revenues have been trending up. So a few things to note about what you're looking at. All these numbers are in millions, as you see here, JMD millions. So when it says 2,145 here, it's actually 2.1 billion. All right, so just bear that in mind as you look through the rest of the statement. So we see revenues have been trending up, leading into 2021, and for the 6 month, revenues are currently 1.3 billion at the halfway mark. Based on where they are in their financial year, we can anticipate that their Q3 should be a good one, based on the fact that it was Easter. Lockdowns would have ended. So I think we can safely say that Q3 is likely to be a good one. So that's something that we're going to be looking out for, to see how they're able to do in terms of that quarter. In terms of gross profit, we see that has been trending upwards as well. For the 6 months, it's at 562 million. In terms of their expenses, we mentioned those before. Those have been, I think they've mostly remained in control. We're not seeing any large, increases for anything here. They've just been steadily increasing along with revenue. So that's something that as a manufacturing company, you want to look at these expenses and how they're trending. To me, there's nothing to really worry about there. Operating profit, that has been growing as well. So this is 285 million. And at the 6 month mark, they're at 115. Next, I wanted to talk about profit before taxation. That's one of those you look at for the junior market companies. We see where that has been growing. For the 6 months, it's at 111 million here. But if you notice the taxation line that's right below, last year, I believe June, since they listed in June 2011, last year June would have been the 10-year mark. So what you can expect, I believe, for even the last quarter that they would have gone into, for the end of their financial year, they would have been at a higher tax amount for them to pay. So that's something that we're seeing here, and we are going to be looking at that for them, because as this number goes up, it's going to impact, of course, net profit. So that means they have to be able to try and grow revenues to be able to get to the same net profit levels that they're used to seeing over the past few years. So that's something that we'll see for them moving forward. And for net profit for the 6 months, we're at 86.6 million. If you notice, that's around the same thing that they did for the entire year in 2018. So the fact that they're able to do that in a half year, it is a good sign. But if the next 2 quarters remain the same, then of course they would not get to the amount that they were able to realize last year. So we have to see what Q3 looks like. I think it's going to be a good quarter. As I said, it's just really for us to see what the numbers actually look like. And they do business overseas as well. So we'll see how that continues to grow. And if they're able to just manage their costs, then the net profit should at least be able to continue to grow. So let's see what happens there. Earnings per share over the last 5 years have been growing as well. It took a major jump last year. So that is something that has been trending to the upside as well. So we have to see, because it's only 6 months, I'm not really going to compare the EPS here right now. When we see the 9-month financials, we'll be able to see what the final number may look like. So that's something that we may do, like maybe one of our Friday stock market updates. I may look at the Q3 financials and see what the EPS looks like for the 9 months. But currently it's at 0.18, but they would have ended last year at 0.46, and it's pretty much earnings per share, how much they're able to earn per unit of stock. So 0.46 is actually growth, compared to where they were 5 years ago. All right, let's talk about their balance sheet now. We see where they're trending upwards in terms of their overall asset base. So if you look at this section here, these are their overall assets. So they have 1.3 billion in assets. That's what we're seeing here. And we see where inventory has increased. Their receivables has also increased. And this sometimes can happen when a company increases revenue. So that's something that you want to watch for. They did mention something about it in their annual report, as in wanting to manage that, to work out, credit terms with customers, having them pay on time, etc. It is something that you usually want to see at least maintained. But again, as revenues grow, it's likely that this number will grow as well. So it's something that we just have to see if they're going to have any major write-offs or anything like that. Based on the industry they're in, maybe some of their customers would have asked for better credit terms, or maybe some of them were not able to pay. And to just maintain the relationship, maybe they just try to work something out, or many things can really be happening there. But it is a number that you want to just keep an eye on, because of course receivables in effect will tie up cash. So anything that ties up cash would impact the business. But as we see, their cash is growing here, so we're not seeing any major impact, at least where their ability to grow their cash is concerned. But it is something that, for me personally, I do look at. All right. In terms of property, plant, and equipment, that has been growing. That's 583 million here. And in terms of investments, 95 million. And I believe the annual report would break this down and tell you the details of that. In terms of their equity and liabilities, that has been trending up in terms of their retained earnings and overall equity. So these are the figures that we're seeing here: 928 million and 1.02 billion in terms of overall equity. Retained earnings, that's pretty good for that number to grow. They do pay dividends consistently. So as they pay dividends, depending on the amount that they pay, it may impact either retained earnings or their cash balance, depending on the amount. The last dividend they paid, I believe, total about 59 million. So that's not going to have a major impact if they maintain that same trend. In terms of long-term loans, there was a $30 million loan that was taken in 2017. That balance is now about halfway. So they're bringing that down nicely. Deferred taxation, that number is at 50 million as at 2021. And so their non-current liabilities is 66 million. And so of course they have enough cash to be able to take care of their liabilities if needed. Payables have been growing. That's 195 million. Payables actually growing is good for cash flow. It means they're able to work out credit terms with suppliers. And once there's no notice of any defaults or anything like that, but they do have the cash to be able to clear this. Taxation payable, that number, as we see here, for the last 3 years have been ends at 28 million. And yeah, I think that's it here. That's in terms of what I want to focus on. So finally, let's look at the cash flow statement. Guys, if you have any questions in the chat, just let me know. I'll try to cover them at the end. All right. So I know the numbers may be a little tricky for some persons, but we try to actually keep it simple. So just let me know if there's anything that you don't understand. All right. In terms of cash flow statement, we're looking at three main things: cash flow from operating activities, investing, and then financing activities. So those are what we're going to be talking about now. So the net profit from the income statement comes over on the cash flow statement, and that's a starting point. And then what we do is simply just add back the items that aren't affecting cash to see what our operating cash flow looks like. So after those things are added back in terms of depreciation, any adjustment to property, plant, and equipment, all of those things, then we can then now look at any changes in operating assets and liabilities, things like inventory. So as inventory goes up, it's going to negatively impact cash. As receivables go up, we mentioned that before, that's going to impact cash. But payables, again, that puts cash, that keeps cash within the business. So that's why some numbers are negative here, and this is positive. Overall, the cash that they were able to generate in 2021 from operating activities was 304 million. And as I said, that number has been trending up based on this graph that we're seeing here. So overall, this is a good thing. This is positive to note. The number keeps going up. It's growing. That means they're able to generate enough cash to take care of their day-to-day operations. That's something that you want to see. Again, we want to look at things like receivables and payables though, and see how those progress over time. In terms of cash flows from investing activities, this is if the company should make any investments, whether purchasing of any buildings or equipment, etc. So that's what we're looking at here. There was $149 million expense for property, plant, and equipment in 2018. And we see where it was 101 million for 2021. And for the 6 months this year, it's 60. Investments were made to the tune of 34.28 million. And you're seeing negative for them because they're outflows of cash. So that's what you're seeing there. They would have received interest here, likely from their investments of 5 million. So that's why you're seeing it in positive. Overall, they would have had an outflow of 133 million in terms of cash for investing activities. In terms of financing now, if they should pay any dividends or receive any loans, things like that, that's what we'd see here. So I did mention a $30 million loan here in 2017. So they've likely been repaying that here. So that's what you're seeing. They did pay dividend, or they do pay dividends consistently. So that's what we're seeing here. 59 million was paid in dividends in 2021. Interest paid 1 million and lease payment of 2.94 million. All right. So overall, the cash used for financing activities, 66 million. So that's what we're seeing there. But overall, as we've been saying, their cash position has been trending up. So that is good to see in terms of their cash flow statement. And as at the 6 months for this financial year, they're at 353 million. So overall, very good cash position. They do have to now consider how they're going to be utilizing the cash that they have. And that's something that, as I said, we'll talk about a little later. So let's look at some of the ratios let's look at first profitability. So in terms of return on equity and assets, we mentioned those are trending up. Anything really from maybe 15 or higher is good, especially for manufacturing. So we see ROE at 23 and ROA at 18. Those are good to see. Return on capital, return on invested capital. I'm not going to focus on these because I don't really want to include this right now. So let's talk about some of their margins next. Gross profit margin here at almost 48%. We spoke about that before. That has pretty much been within the same range here from about 43 to 48%. that has been holding fairly constant. EBITDA margin from 12 to 16%. Operating margin has been increasing, so that is good to see. It ended last year at 13.29%, and net income margin from about 7.5% 5 years ago to 10%. Because it is manufacturing again, you want to take that into context. So really, if you see between about 5 to 10%, that is considered good. So they need to be able to maintain this. Of course, because they're now going to be paying more taxes, we have to see how this number holds, especially for the the periods to follow. All right. And their tax rate, I wanted to include that as well. So we see where for 2021, the tax rate was 25%. Previous years, that would have been in the teens. So this is something that you want to watch closely for a company like HONBUN. All right, EPS, we spoke about that before. That has been trending up nicely. And the year-over-year growth is shown here. So we really want to see if this is able to maintain that same growth that they've been seeing over the past few years. So the 9 month is going to be important to look at, and of course the end of the year in terms of how they're able to close it out. This is summer now, so maybe I don't necessarily know how much of their customer base is really contingent on like schools or universities. So since it is summer, we're not sure what impact that will have. I will try to check out the JSE to see what their Q3s and Q4s are normally like. Let me see if I can actually bring that up here. This is the Jamaica Stock Exchange website. So their Q3, this is what we typically see for Q3. They had a really good Q3 last year, 64 million. So that was good to see. So let's see what their Q3 numbers look like. That's gonna tell us a whole lot. For the last 2 years, they would have been averaging maybe about 46 million for Q4. So depending on how their Q3 looks, then maybe we can do, let's say, an assumption for Q4 to see how they will end the year. So that's something to take note of. All right, let's go back to the Excel. In terms of some of their liquidity ratios, current ratio speaks to their ability to pay all their current liabilities with cash. So that's 2.77. That means they have 2.7 times cash than they do, or current liabilities or current assets than they do current liabilities. So that's definitely a good sign. They're able to clear their short-term debt easily if needed. Then quick ratio, where we remove inventory, that's also good. Anything over 2 here would be considered good. Cash ratio, now we're just managing that. That's 1.76. That's also good, right? So all of these ratios for liquidity are trending in the right direction. So they would have seen some growth. Well, the current ratio would have seen growth in the last 5 years. Same for the quick ratio, and the cash ratio has almost doubled, right? So those are all good signs for them. In terms of debt to equity, that's trending down. That's actually a good thing as well. We see them taking the steps to clear their debt. So that is good. They haven't incurred any new debt recently. So that's something that bodes well for them, right? So overall, good position in terms of leverage. Let's look at cash flow. Free cash flow is something that we want to look at as well. So that is something that is 206 million. And price to free cash flow, again, I'm not sure I want to add these ratios that we have not covered before. This was just a part of my sheet, so I won't mention that here. Maybe I'll do a video explaining the ratios first before I introduce them, but this is just a part of the overall sheet that I have. And yeah, so that's it. So I'll stop it here. So again, this is just a good thing to see that is trending up in terms of free cash flow. So overall, I mean, I would say that their financials look good to me. Expenses are something that we're going to have to watch in terms of how they're able to manage that for the year. It is an interesting time for them in terms of pandemic. So that's something that we want to see how that continues to progress. Let me actually see what I want to bring up here. Just give me 1 second. I think I want to bring up, so this is their annual report for 2021. I just want to highlight the MD&A for this one and their 6-month financials that's ended on March 31st. So I'm going to speak about those two. So I'm going to go to the annual report first. I'm just going to speak about the highlights. So since we looked at the financials, I'm just going to be picking out some key things that were said in the MD&A. So just bear with me because I'm going to be going, back and forth a little bit. So anything that we would have, mentioned, I won't cover it here. So I may skip over some things and just highlight some things that I think are important for them. So export registered 9% growth. That's good to see. That's what they're saying here. Remember, they do have business overseas. They said pre-tax profits would have increased by 52%. So it's saying here that the demand for their products would have persisted, leading to an overall increase in sales. We saw that they had their highest sales number in the last 5 years in 2021. That's what we're seeing here. So it says, while exports would have increased, the majority of the increases we're seeing in the domestic market, which says to me that there's opportunity for them to grow overseas, but that means also that demand is rising locally, which is a very good thing. We saw during 2021 that they did really great in terms of sales. So 28% growth in terms of revenues. So if it continues on that trend, then it's going to be a good sign for them. There is definitely growing popularity for the HONBUN brand. They have really good products that I think a lot of persons are really taking to. So it says here, while the cost of their major raw materials would have increased significantly, they were able to maintain their margins. We saw that, and that was from improved line efficiencies and investment in their automation. Sorry, I don't know why I'm Bantu, I'm gonna get to that question soon. All right. So net profits would have closed here at 13.5% compared to 11% in the prior year. During the year, they would have ceased from receiving the junior market tax break. We spoke about that before in June 2021. And as such, they were subjected to the full application of the tax requirements, right? We would have seen that in their financials. All right. Let me scroll through here. Their new products for 2021 have done exceedingly well. These include their seeded retail burger buns, hot dog rolls, and cinnamon raisin loaf. Cinnamon raisin loaf is really good. Let me just say that. So their strategies increase their frequency to market, allowing for improved market penetration and brand awareness. Markets were visited more often by increasing their fleet size. Let me go back up here. That's speaking to their cash position there. It's saying they would have purchased 101 million worth of additional property, plant, and equipment. We saw that in terms of their cash flow statement. So it includes the acquisition of more equipment to increase their efficiency and capacity. And this is something that we're going to see them do as a manufacturing company to continue to try to increase their overall efficiency. At the end of the year, total non-current assets were 688 million. Would have gone through that already. So though the company's investment portfolio is down, it represents an avenue to source capital through disposal of to borrow against. So that's speaking to their investment portfolio there, and it says that they have some digital bonds as a part of that portfolio. Let's see what they have to say over here. So usually what we want to do is look at the company's outlook. So that's what I'm going to scroll to here. So we identified this before, solid cash position. So that's something that we know already. And this will prove advantageous as they seek to further expand their production space. So you can look forward to those being reflected. Automation and distribution capacity for this financial year. All right, so we're going to see that at some point. So it could either mean new space or just maybe improved equipment within the same space. All right, positive inroads continue to be made with regards to receivables. So remember we spoke about that because we saw the number growing. So they're mentioning it here. So while trade receivables stood at 71.3 million, marginally below the 74 million that was recorded in 2020, the amount of monies that customers owed them in the over 90 days bucket would have continued a downward trend and fell from 15.7 million to 7.2, right? So that is good to see. So these are customers who owe them more than 90 days. That would have dropped from 15.7 to 7.2, but that means 7.2 million for them is greater than 90 days, right? So that's something to note here. It is trending down, that is good. Based on the type of business, some amount of bad debt will likely be there, but the fact that it's trending down is a good sign. Right, the improvement was mostly a result of working more closely and strategically with their customers to help them bring down their own debt, right? Because if you think about it, if their customers have debt, then they're not able to pay HONBUN on time. And the improvement also meant that they could write back 8.2 million of provision for doubtful debt to the income statement. All right, so that is something that they were able to do, which again is a good sign. All right. Let me see if there's anything here. Their Easter bun sales were incredibly affected. That would have been last year. So again, I don't think that this would hold true for this year. So let's see how their Q3 does. Let me see if there's anything else here that is worth mentioning. All right, so their rum cakes would have driven 9% year-over-year increase. That's good to see. All right, so that's it for that one. Let us look at the 6-month financials now. So this is available on the Jamaica Stock Exchange website. So we're just going to talk about this. So they earned net profits of 41 million or 46% below the prior year. So that is something to note there. Gross revenues were 708 million or 34% more than last year. So the decline in net profits was attributable to a number of factors. The rise in material costs. So this is something that we see that would impact this type of business. And this was absorbed by the company and repositioning to increase distribution channels being two major factors, right? So this tells us a lot. One, they would have had an increase in terms of their material costs, and they would have decided to absorb that cost without increasing their product prices. So that's something that they may do slowly over time. But of course, the balance is if you increase the price, then you may reduce the demand, right? And we see everybody is really complaining about the money that they're spending on groceries. So of course, if these items that are considered, well, some things may be considered not necessarily luxury, but not necessarily an essential, then it's something that they want to be careful in terms of how they raise prices. All right, total sales were 1.3 billion. That's 39% better than the prior year. This result in terms of net profit was 22% below the prior year. So that's something to note. Companies' margins declined for the quarter due to global price increases in key ingredients from suppliers due to supply shortage and shipping challenges. So this is going to be something to really watch for this type of company. And that would be, if it was not stated here, this would have been my concern, because as we see, and I think we spoke about this on our stocks to watch, right? If companies aren't able to manage their costs, it's going to greatly impact their profitability. And also, if there are any challenges in terms of whether it be from suppliers or shipping or anything like that, that's going to impact the company as well. And as they're saying here, flour prices would have increased again in late March, right? So there are a lot of things that could possibly impact them there. Their new products would have increased sales in terms of having great demand. The investments that they made in increased distribution of have also had a significant contribution to revenues, making your product more easily available. That's something good to see. They would have, expanded their distribution network. And let's see here. I'm going to talk about the receivables. We spoke about that already. Let's see, in January 2021. All right. Okay. So that's really it. And we would have spoken about a few things in terms of their 6 months, but I'm just going to highlight something here. So we would have seen in terms of, they did more in terms of revenues for the 6 months this year as opposed to last year. But you're seeing, gross profit of 562 million there. And I believe what we see here is a decrease in operating profit right here. All right, so that's the part that I wanted to highlight compared to 6 months last year. And we would have seen here profit before taxation as well, being lower than the previous year. I mean, all these things I would have, spoken about before. Taxation, we know that this is going to be a higher number compared to previous years. So net profit for the 6 months this year is lower than the same period last year. But as I said, a lot of factors would have gone into that. So Q3 is going to be a very important quarter for them in terms of how investors may respond to their performance. All right. So yeah, for everything else, I think we can just wait to see. I think the 9 months would tell us a lot. So let me just let's go to the price history very quickly. Actually go back to close that out. So we're going to check out the price history. Let me just do that real quickly. All right, so to answer Journey's question, since I do have a moment here, so I have video. I don't have a video explaining the financial terms using financial reports. That's probably a good idea. So thank you. I'll take note of that. Let me see if I can bring up the screen here again. All right, so we are on the JMMB Moneyline platform. Again, they are our sponsor for this stock review. So what we have here in terms of what we're looking at. So HONBUN would have closed today at 8.56. They would have seen a high of 12.21 last August, I believe. So that's something that, let me see where we are here. That would have been August last year. Am I looking at the right thing here? Let's look at 1 year. Should I be able to see it here? So you're not able to see it on this chart, but let me see the candlestick chart here. It was sometime in August last year. So I wanted to point it out on the chart. I'm not able to see it, but trust me, within the last 12 months, it was at 12.21 in terms of price. I believe it was August 23rd, somewhere about here. In terms of where it is year to date, let's check that out. So that started the year at about $9. And as we said, ended at about 8.59. So it's slightly down year to date. I think that's maybe about 7 or so percent, almost 10%. So that's not a major fall off from where it was at the start of the year. But of course, considering where it was in terms of the high, it's down almost 25% from August of last year. So it's something to note. We saw it go all the way down to about $7.39 in June earlier this year. But of course, we know that a lot of stocks would have seen that sort of decrease in price right around the time of a certain IPO that I'm not going to call the name of right now. So I wouldn't take this to mean anything major would have, taken place. That's probably just persons looking to use capital to make other investments. So I wouldn't read too much into that there. But it's been trading steadily within this range here. In terms of the queue, we're seeing 13 buy orders and 26 sell orders going all the way up to $15.80. Buy orders starting at $8.51 being the best bid and $6.21 being the lowest price. So not a lot of trades taking place right now, not a lot of activity. Only 4,800 units traded hands today. So not a lot going on right now. The largest volume that we saw was in April of about 4 million units. So maybe I'll check to see if there was maybe trading in shares around that date. Let me just do a quick check on the Jamaica Stock Exchange. See if there's anything around April that we need to take note of. April, director sold a total of 4 million shares. All right, so that's what would have happened back then. All right, so usually when we see this large volume, we want to check to see if it's a director, and that's what we're seeing here. A director sold 4 million shares on April, and they would have actually paid a dividend, as we mentioned earlier this year. Right? So yeah, so let me actually go back to this slide now that we're talking about. So we looked at this before, so I'm going to move on. Price history. So we spoke about that. We just looked at this. Let me actually remove my image again. So it's down 7.6% year to date, down 3% for the quarter and the month, same thing. And in terms of the 52-week range, it went as high as $12.12 and as low as $6.52. So it would have been up from the low and about 20 to 25% down from the high. In terms of volume, we do see that not a lot of volume is traded really for this company on a daily basis, but depending on, I guess, the time of the year, we may see those volumes pick up, or if the directors are buying or selling. So that's something to note there. The shares outstanding is 471 million. We saw that from the stock split that we announced earlier, and the market cap is 4.03 billion. Right. In terms of dividends, they did announce a dividend earlier this year. It was paid on May 31st of about 2 cents. So typically their dividends range between the 4 cent and 6 cent. In 2020, they did announce, I think, a 3 cent dividend. So that maybe could have been based on the climate that year. But we did see them make up for it last year in terms of paying a 9 cent dividend for the year. So that's something that you want to look at. The yield is not very great. I believe that works out to about 2.1% or something like that. So it's not to be considered a great dividend stock in that way, but it is something that they do pay dividends consistently. So that is something that, depending on your need in terms of dividends, it may be something that you're interested in. So that's something that I wanted to note there. And in terms of news, there was nothing significant to note there. So nothing to say at that point. Let me see if there's anything else that I want to capture before I close out this video. No, actually. All right, so I can take questions now. Let me know if you have any questions. I'll be going through the chat and see if there's anything that I can touch on. All right. Hi, everybody. Happy to see everyone. All right. So I think I would have answered this question already. So I'm going to create that video. Nicole is asking if I can explain how to understand the queue and to make the best bid. All right. So let me go back to the screen here. So really what happens, so the queue is very dynamic, right? So it's not something that even though we're looking at this queue now, by tomorrow morning this may change. All right, so I'm going to zoom in to just kind of help you understand what we're looking at. So persons who own the stock, who are seeking to sell, that's what you're seeing over the sell side. So the best ask in terms of the lowest price that you're able to buy based on the queue is $8.99. Now, how the queue works is depending on whether or not you're buying or selling. Sometimes persons, if they see that they put a price in the queue and it's not selling, they may choose to go for a lower price. As we saw, it did close at $8.56 today, and the lowest sell order is $8.99. So that makes it maybe about a 43-cent spread. That's what we call that there. In terms of now the persons who are buying, you can look at the queue if you really want to get shares. you can, for example, put in what's called a market order. So the market order just allows you to buy at whatever price it's lowest available on the sell side. So it's something that maybe you want to choose very carefully depending on how urgently you need those shares. So in terms of making the best bid, it's really just your understanding and assumption of the demand. So if you think that you can maybe set a price in between this buy of $8.51 and this ask of $8.99. So if you want to, for example, set a price that is below this $8.51 or above it, it's really based on your assessment of the demand for the company. So usually, if it is that you think that you're not really concerned about price in the short term and you just want to own the company, then you can just put in a market order. If the stock trades a lot and you see that it's for example, there are a lot of orders or the prices are very close in terms of buy and sell, then you may want to set at what's called a limit price, where you determine the price that you're buying for. So let me know if that makes sense. Sometimes market orders make sense, and other times limit orders make sense also if you want to be more strategic about the price that you're setting. I personally have never used market orders to buy, but I have used market orders to sell. And that's because I want to be very specific about the price that I'm buying. But if I'm selling at maybe 100 or 200% profit, then I'm not concerned, whether or not I'm making or losing a few cents. Right? So hopefully that makes sense. But Nicole, I would recommend that you watch. There's a video that we did on understanding the queue that I'll share in our Telegram group that you can check out that video, and it will help you to understand the queue a lot better. All right. Thank you for your question, guys. If there's anything else, let me know. If I missed anything, just post it under the comments and I'll get to it as soon as I can. Again, I want to highlight, JMB Moneyline as a sponsor for the stock review and analysis. We are going to be posting one every 2 weeks now. There is going to be a schedule that we'll communicate. So the next one that we're going to review is Sagicor Select Funds. That's been highly requested by someone. Hopefully he's here. That is long overdue, but wanted to ensure to get certain pieces of information before we do that review. So that is going to be coming out in 2 weeks. So we're going to be doing the reviews on the first and third Wednesday of each month moving forward. So if you want to know when the next review is going to be, just pretty much look at your calendar and you'll see when they'll be coming up. All right. Thank you guys so much for being here. Hopefully this was a good review for you. If there's anything that I might have missed, let me know. If you have questions, again, you can ask it under the video or in the Telegram group. And yeah, thank you so much for watching. I'll see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N.